Today I want to introduce you to IAS 2. IAS 2 is on inventory. So I want to talk about inventory. Now, the International Accounting Standard Board issued IAS 2 to provide guidance for the accounting treatment of inventory. It is a standard that prescribes the accounting treatment for inventory. You must have heard inventory, stock, opening stock, closing stock. Basically, inventory is stock. Good. Now, the relevance of this standard is to help accountants to provide a guide for them so they can be able to differentiate between some confusing aspects of inventory. I mean, to differentiate between a PPE, for instance, property, plant, and equipment, and inventory. And also to show them how it should be treated, how it should be measured, and then some disclosure requirements. Now, we're going to delve straight into the IAS 2. What is inventory? Inventory has three components in its definition. One is that it refers to assets held for sale in the ordinary course of a business. So if you're in the business of buying and selling cars, the cars that you are holding for sale in the ordinary course of your business, which is buying and selling of cars, we say that is inventory for you. Also in the production process, that is assets that are in the production process. We're talking about work in progress. You know, we have finished goods. When you do some work on raw materials, we call it work in progress. And of course, you have raw materials and supplies. So basically, when you have assets that are involved in the production process, we also refer to them as part of inventory. Then the last component of IAS 2 that I want to talk about is raw materials and supplies that are consumed in the production process. So the three components of the definition of IAS 2 inventory is one, assets held for sale in the ordinary course of business. Also, assets that are involved in the production process. And the last one is raw materials and supplies that are to be consumed in the production process or in the rendering of service.